It's Wednesday morning, May 24th. We're about 90 minutes before the open. Good morning, traders. Let's take a look at our last two picks, see how they fared, do some market analysis, get our bearings, and then let's find two new picks. That's how all of these videos work. ACAD was the bullish pick that I highlighted Sunday midday. Didn't know how the market was going to open up, but you can see this stock. That was the price action Monday, is this green bar. Yesterday, really nice. I love ACAD. Let's zoom out, take a look at where these trend lines come into play. And there you can see that it is right on another major trend line. These trend lines are fantastic. When the stock breaks through these points, like this one right here, you can see the follow through and the momentum. We want to break through those on nice heavy volume. What's most impressive about ACAD is that it rallied against a weak market, and you can see that in the relative strength, orange line above zero. So let's take a look at that 5-minute chart. Yesterday was kind of a classic example for that. I'm going to overlay the SPY, and you can see market down, down, down. What did ACAD do? It rallied like mad, closing almost on its high of the day. That is relative strength. That tells you that institutions are in there buying this stock. They don't care that the market had a bad day. They see that as an opportunity to try and scoop these shares up. Buy, 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 buy. That is the advantage. That is the edge that we trade. We lean on that relative strength because we know the institutions are in there accumulating shares. You can see how when the stock did dip during the course of the day, if you waited for this relative strength indicator to go below zero and then to pop back above zero, you have a nice entry point right about in here and a decent trade that sets up. Yes, you were trading against the market. So you did not have a market tailwind, and the stock still managed to grind higher. So let's take a look at the other pick. The other pick was CROX, and that was a bearish pick. So first, let's go into the daily chart, and you can see this is the price action Monday, price action Tuesday. The stock has continued to drift lower, and here we can see how the stock is weak relative to the market, and it's been breaking through these longer term trend lines. Let's zoom out, see where they come into play. We'll take that SPY overlay off. That'll help to give some clarity to the chart. This is a major trend line breach. This is what I was leaning on, was this long red candle on heavy volume through this major upward sloping trend line. We call this a low plus. Now that it's through that, it's also through two low minus trend lines. It has an easy path to the 200-day moving average. If we get some market weakness and we blow through that 200-day moving average, it will have an easy path to this trend line at about $96. So these trend lines also help you plan your trades. The ones that are within 5 ATRs of the current price of the stock are also shown on the chart, and that gives you an idea of how far the stock might possibly travel before hitting another one of these trend lines. Got another feature that I'm going to be showing you this morning. We've added a number of variables that you can add to your searches, your watch lists. You can even add them to the heads up display. And more importantly, you'll be able to set some alerts up. So I'll show you a little bit about that feature, but let's go in and take a look at what the market is currently doing. Let's get our bearings, and then let's find a couple of trades. So the market has been relatively weak the last few days. You can see how yesterday we had a gap down and then a compression for about 2 hours, and then we broke down. Now, we didn't know if this was going to be simply to trigger some sell stops, and that is a tendency for the market when you have a resting point. So here's the price action from Thursday. Here's the price action, excuse me, this is the price action from Friday. This is the price action from Monday, and you can see 1, 2, 3, 4, 5 touches. So we broke below that pretty clearly, but we didn't know if we were just going to test those lows and then bounce right back up. But we'll normally see some buyers in here. Buy, 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 buy. Okay, there's support here. Buy, buy, buy. So where do these buyers typically set their stops? Just below it. And so what we'll see is a compression oftentimes and a long red candle through that support level to flush these guys out. So they trigger those stops and then the market bounces right back. That didn't happen this time, but we didn't know that for probably 20 minutes or so, almost a half an hour. So you get the initial breakdown. You don't get any follow through in here. You get this nice long green candle. So it looks like, yeah, maybe this was just a fake and we're going to bounce right back up. Now, I will say typically on this pattern, you'll see a sell off and then maybe one or two bars and then a long green bullish engulfing candle that erases that drop completely, and then you're off to the races because all of the sell stops are triggered. Those longs cover their position. This also attracts some short sellers, and then the market releases and those short sellers get squeezed out of the trade, and anybody that was long here that got stopped out when those stops were triggered, they think, oh my gosh, that was a head fake. I need to get long again. And then that fuels the rally. So when you get these breakdowns through a support level like this, you have to be careful. You have to wait to see, am I going to get follow through? Now, if you start getting immediate follow through and you start trickling lower, then you know that that's a legitimate breakdown. But we didn't get that right away, and it looked like this could be recovered. So personally, I've got a bullish 1OP cross. I'm going to assume that the market is going to do what it has been doing, which is just to compress within a range. So to float back up into that range would have been what I would have expected, but not anything that you had to go gonzo over. You kind of wait and see what happens. This long red bar told me that this sell-off was legitimate. And you can see you've got this nice little brief rally, lasts about 30 minutes. You don't want these bounces to last more than 30 minutes, and you don't want them to retrace some of these major long red candles like this. So the open of that long red candle was critical. You did not want to get above it. That's where sellers were before. We still expect to see the sellers there now. And you can see it never quite recovered it, but this long red candle that closed on its low came on heavy volume. This was a key bar throughout the course of the day that told me that from 416 you're going to see additional selling, and that was about 20 additional points of S&P selling. When I see this, I am instantly in shorting mode because now I know that sellers have control. Those were long red candles. That's a long red candle. And so we compress her a little bit and then we get another drop in here. So the market's fairly weak just as far as that day is concerned, but we're also seeing that this breakout here through the 417.50 level on the SPY that came last Thursday, this was a really decent breakout. Market closed on its high of the day. The volume was actually pretty good too, and you can see that right in here. We have a horizontal resistance level that we finally have broken through. There was some positive news about a debt ceiling deal getting done. We had monthly options expiration that following Friday. I think that programs pushed the market higher on Thursday. Could have been option expiration related. But look at what's happened since then. No follow through. And this is very important. Remember how I told you we don't want to see these key bars retraced? Well, the open of this long green key bar is support, and we closed below it. So this is a failed breakout. This morning, the S&P futures are down 15 points. What's weighing on the market? Well, right now it's the debt ceiling. No one is pricing in a default because it's the unimaginable. But the market has not priced in any chance that there could be a delay in getting this debt ceiling passed, or that either side might not be flexible. This is the VIX, VXX, actually, and you can see how option implied volatilities have been decreasing. If asset managers had priced in the chance for a possible default, you would have seen option implied volatilities increase just like they did in here. But we haven't seen that. And that tells us that they're not buying protection. They don't see this as a real market threat. And the longer this drags on, the more nervous investors are going to get because they don't have any protection right now. They don't see this as even plausible. Well, there can be a surprise, there can be a delay. Republicans or Democrats dig their heels in, and now all of a sudden we start hitting the deadlines. And even when you hit the deadlines, it still takes time to get these bills passed. All the while, you have these pending payments that need to be made. It's a real mess. And what I've seen happen previously is that when you get to that juncture and a deal still isn't done, the market will send politicians a message, and it will come in the form of a long red candle. And then the politicians go, uh-oh, the financial markets are selling off hard. We better get this thing done. We could see that type of long red candle, and I believe that it could hit the major moving averages. So let's put the 100-day and the 200-day moving averages up. Those will be the major ones. And you can see the 100-day comes into play right around 405. And that's also a horizontal support level. 100 days at 403.32. So I think this 404 level right in here, and that's close to the low is 404. That's also very close to 404. So let's call it 404. That's pretty close to the 100-day moving average. This is a potential support level that could be tested very, very quickly. That's about 100 S&P points away because we're at 414 right now. Yes, we've seen lots of 100-point S&P days in the course of the last year. So we haven't seen them recently, but that doesn't mean that they can't happen. So I would be pretty cautious with long positions on a swing basis. Now, if we do get this big market sell-off and we test this major moving average, I think this will probably be a good entry point to sell some out of the money bullish put spreads because I don't see this lingering. I don't see this having a long-term effect. Politicians are very good at kicking the can down the road, and they're likely to do so until October when the budget has to be passed and then getting a bigger deal signed. And it's not going to be a long-term deal because we've got an election coming up in 2024. So this can just keeps getting kicked down the road. On a temporary basis, we get this big sell-off. I'd be selling some out of the money bullish put spreads. I believe that the price action this summer is going to be back and forth sideways, and we're not going to see a lot of movement. We're going to see a lot of this, and that means that those bullish put spreads on strong stocks, I would particularly favor the tech sector since that's been leading the market higher. You're going to have some nice spreads. You're going to be able to sell them way out of the money, take advantage of some slightly elevated option implied volatilities because this move is not going to last long. If you think, well, I'm just going to wait for it to come down here and then I'm going to wait for support to be established and then I'm going to enter the trades, you won't be able to because it's not going to spend a lot of time there. It'll sell off and then maybe you get a doji and then it'll be bouncing right back. So you're going to have to be a little quick to the trigger. Pick the best stocks, sell your bullish put spreads below technical support levels. You can even sell them a couple of months out, give yourself plenty of breathing room, and then watch for the market to kind of be in this range again during the summer months. So I have not been doing a lot of swing trading, but if I see this particular pattern in the course of the next few days, I'm going to be in a mode of selling some out of the money bullish put spreads. And then once the market finds support, the debt ceiling gets passed, we go back into this stuff. I'm not going to be doing any swing trading. I have to wait for my next window of opportunity, and I'll focus again more on day trading. So what happens if a deal gets passed? Well, if a deal gets passed, then we probably do challenge the high again. I don't know that we'll break through it, but it's always good for us in this choppy market environment to have a long pick ready and a short pick ready. So let's shift gears. Let's take a look at a couple of stocks. Any of the stocks in my videos over the course of the last 2-3 weeks will set up well for selling out of the money bullish put spreads on the stocks that I've highlighted. Those are some strong stocks on a daily basis, so please go back and watch some of those videos. You can even go back and just watch the first 5 minutes of the video, because that's where I'm going to be reviewing the previous pick, and then you can collect those symbols and you can post them. Those will all be excellent stocks to consider for selling out of the money bullish put spreads. So let's go into green royal flush. One thing that I'm going to show you is that if we right click on any search table, we can edit columns. And this means that we can add all of these variables. So you can see, I want to see heavy volume on a 15-minute basis. I could add a 5-minute basis, but if it's heavy on a 15-minute basis, that's fine. Heavy volume on a 30-minute basis, heavy volume on a daily basis. And then I'm looking for our buy signals on a 15-minute, 5, 15, 30-minute basis and daily basis. And then I'm also looking for strength versus the S&P 500, 5-minute, 15-minute, 30-minute, and daily basis. So those are all the columns that I've got marked. And this makes it very easy for me to have another visual aid. I'm looking for blue dots because that means I got heavy volume across the board. I'm looking for green dots here because that tells me that I've got strength intraday and on a longer term basis. And then I'm also looking for green dots to extend beyond, because this tells me that I have strength versus the S&P 500 on multiple time frames as well. So it's very easy to spot the best stocks. One other thing that I'm going to mention is that if I right click, I can also create an alert for all the stocks that are in this list, or for individual stocks. So if I click on the header, I'll get them all. If I click on an individual stock, I will highlight this particular stock. And for PLTR, it was strong yesterday before the open. And so if I wanted to wait until the stock had a little bit of relative weakness to get in the trade, what I would do is I would click this and I would add it. So I have trade signal marked right now, which is not what I want. I actually want strength versus SPY. So when the stock is strong versus the S&P 500 on a 5-minute basis, so I'm going to click plus, and then I'm going to click this little box right here, because oftentimes what happens when we're trading, this is a great feature. I'm super excited about this. It is going to help members get into trades at better prices and to exercise patience. Many traders have FOMO. They start chasing stocks at the high of the day. This is going to help you take a deep breath and buy that stock on a pullback. So when you have a strong stock like PLTR, it is already going to have relative strength early in the day. That's what got it on our radar. So, because it's already true, 1OSI is above zero, what we want is we want 1OSI to fall below zero, and then we want to get an alert when it goes back above zero. So it needs to go true to false. which is what it's true right now, that it's above 0. It needs to go to false, and then it needs to go to true, and that's when I want my alert. So now let's take a look at PLTR, for instance, and we'll bring the chart up. You can see how strong this stock is. This is going to be my pick of the day. I do have another one that I might use for the pick of the day, but I really like PLTR. Let's go in and see how that alert would have performed yesterday. And here you can see. So you've got the stock pulling back right in here, right about here, would have given you a little entry signal. So let's put the crosshairs up so you can see where that would come into play right here. So let's say you got in here and now the market's starting to fall apart. Well, if you got in here, you're able to exit right here for a small loss if you're going to play it very tight. And then you would wait for the next 1OP cross. As stock pulls back, here's your next cross is somewhere right in here. And you can weather that storm and still make a little bit of money in it. I'm showing you an example where you're trading against the market. So obviously, once the market starts breaking down and making a new low a day, you're not going to be looking for longs in this area. ACAD would have worked. I showed you that earlier, but you're typically going to want that market tailwind working in your favor. So you'd be looking to short weak stocks, and there it would be exactly the opposite. So when you get relative weakness, and now the stock is temporarily relatively strong, and now you get the cross below 0 again. This is when you want to get your alert because it will set you up for that short, and you'll be joining that market tailwind. So these alert features can be set on LRSI, buy and sell signals, so that if the stock goes from a bullish signal to a bearish signal and then to a bullish signal again on a 5-minute basis, you'll get an alert. You can use any time frame, M30, you can use D1, you can use a combination of variables, and ultimately in our future releases, we're going to have so many different variables that you're going to be able to use and configure for these alerts. It's going to be very, very powerful, very, very specific. I'm confident that a lot of our members are going to be setting up some pretty sophisticated trading alerts that are going to help them identify very specific trading opportunities, very high probability trading opportunities. So we're going to be releasing that today after the close, and the display is also going to help us zero in on these stocks. So let me take a look at a couple of stocks in here. So here you got AVGO, looks really good. So you've got heavy volume, you've got buy signals across multiple time frames, and you still have strength versus the SPY on a daily basis. You can see AVGO is taking off very nicely. PLTR I really like. I like the long-term breakouts. These are our automated trend lines, so we can see where they come into play. And that, let's zoom out one more time. Sometimes we've got to go out a long way to see these trend lines. So we draw them back. We also have alerts for these trend lines. That is a very significant trend line breach. That is a very nice trend line breach. So we have a high minus trend line breach that spans back to January of 2021. So this has been in place for 2 years. Folks, that's a major breakout on heavy volume. PLTR. That stock continues to go higher. You get any kind of market breakdown, you get any kind of market selling, I will be out there. This $10 put, I could sell that with ease. I wouldn't even think twice about that trade, given the price action that I'm seeing, given this longer term breakout right there. This is going to be longer term support. And these options tend to trade at a pretty decent premium as well. So you should be able to sell those naked puts and collect a decent amount of money. Let's take a look. PLTR, if we were going to go out, let's say let's go out to the June regular expiration and just see where they might have been. There's not a lot of premium in them, only 10 cents or so, But hey, we're currently about $4 out of the money. That's a really big decline of about 30% or so that the stock would have to make. It's going to have to come in, and I'd like to get 50 cents for these if I can. That's going to generate a really nice return, and my net cost on assignment would be somewhere at the $9.50 level. But that's certainly the type of trade that I would be looking for, and I would have no problem buying the stock down at $9.50 where we've got this nice base that's forming. So PLTR, given the price action I see right now, it's going to remain relatively strong. I believe that the stock is going to continue to move higher. What would I be looking for? This long green candle came on heavy volume. Good chance that there was news. So if you like to check the news, see how material it is to the company, go in and check that news. Make sure that you've got your comfort level. The first thing we would like to see is for the halfway point of this long green candle to hold. We want it to be rigid. We want that $11 price point to hold. So I would not want to see the stock crumble. Down, down, down. Whoop, there goes $11 with ease. That's not what I'd want to see. What I'd want to see is a weak market like we are likely to get today, and sellers come in, they try to hit it, they try to hit it, they try to hit it, they try to hit it. Maybe they can move it a little bit lower, but it's very, very stubborn. Even with heavy market selling, just can't get that stock to go down. That's the type of price action we want. That's what tells me that buyers are still in there accumulating shares. That's the price action you should be watching for. And if we get that price action, OneOSI is going to stay above zero on a D1 basis. It's going to stay above zero on multiple time frames, even some of the shorter term ones. Ultimately, we want to see the open of that long green candle preserved. That's why we would be interested in selling that $10 put, because this horizontal support level and this longer term breakout should lend support to the stock at that price point. And you can see the earnings after the close must have been excellent. The guidance must have been excellent. Big money liked what the company had to say in terms of their guidance, and that's why the stock gapped up, pulled back just a little bit, and then it lifted off. So I like PLTR. CVNA, it's got multiple resistance lines here that it's still trying to get through. We could zoom out on it, but let's keep this moving along because I just want to show you how easy it is to identify nice stocks. Here you've got lots of volume in here, but you're missing some of the buy and sell signals in here. We want to see lots of green across the board. So OCUL, blue, 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 lots of green, couple of reds on a shorter term basis for relative strength, but the D1 is still intact. Look at that. That's not a bad looking chart. You can see this volume spike is making the rest of this look pretty diminished, but the 1.0 volume is above zero and the stock has relative strength. So it is trying to break through these major trend lines. Zoom out, take a look at them. This stock is relatively strong. It held up well yesterday. So yes, it could be one to consider. Going to the 5-minute chart, gapped higher, was able to preserve that opening gap and close above it. So yeah, the stock was able to finish up in a weak market. So that also looks good. I'm just going to go through a couple of other searches here. You can see now I'm just clicking through our different searches and taking a look. So this is breakout. We know we've got some trend line breakouts. IOVA, look at that. Solid green across the board. That is the 5-minute chart. You can see how it spiked and it held almost all the gains throughout the course of the day. IOVA, through these major downward sloping trend lines, through all the major moving averages, heavy volume, folks, put IOVA on your watch list. This is a good looking stock right here. Hadn't even looked at it before. Breakout times 2. We'll take a look at this. AVGO, nice. Hey, look at there. ACAD, right up on the top of the list. I still like that one. I think that's one that you're going to want to have on your watch list as well. We'll go through and take a look. Golden Cross. Now, here we've got SMA crosses in here, and I see a couple of stocks. WH, we got a bullish explosion alert on yesterday, and that ended up being a pretty good one. PFE, you can see how it's got strength throughout here. Let's talk about PFE for a little bit because we got a bullish explosion alert on that yesterday, 2 days ago. And let's go into that 5-minute chart. Let's zoom in. So we track what the average volume is on a 5-minute basis for every stock over the last 20 days. And then we calculate the average volume for that exact 5-minute increment during that exact moment of the day. And now we're comparing apples with apples. And when we see a big volume spike and we have lots of big price movement, then we know we have a good candidate for an explosion alert. There's news that just came out. Before that news can even hit the wires, we're going to see it reflected in the volume. These institutions have optical readers and they are on it instantly. Before anybody can even type a word, boom, done, out. That candle, and you can see that candle closed near its high. When you see big companies, Pfizer is a big pharma company. These mega cap companies like this are hard to move. They're like battleships. When you get these giant volume spikes and this big price movement, it tells you that this news is likely to be legitimate. And so you're able to enter the trade and then the stock continues to move higher. Now, I still like Pfizer. I like that news. I would suggest you go in and check the news to find out what it is that's got investors so excited. Here's all I need to see. I just trade technicals. I don't need to dissect the news. You can if you want to. This price action tells me this stock wants to go higher. You can see orange line above zero, relative strength. Orange line above zero the entire day yesterday. Look at that volume. Asset managers like the news for Pfizer. Market was down hard yesterday, but the stock kept moving higher. Let's put that SPY overlay up. Market down, down, down. Stock holding all the gains and moving higher. D1 chart on Pfizer. This is another one. You get a market pullback, debt ceiling related, you've got major support here, and I would lean on this longer term trend line that comes into play right around the $38 price point. I would sell an out of the money put on Pfizer to try and buy the shares at that price. You could do a bullish put spread as well. In any event, I believe that a debt ceiling sell-off could be very severe, but also very temporary if it happens. So I like Pfizer. I think Pfizer's another stock that you can look at, and all you have to do is look across the chart to see where all of these dots are lining up. And if I go down here, there was another stock that looked pretty good. Wolf seems to have a lot of nice dots. So that's all you have to do is run these searches, go through, take a look for the stocks that have all the check boxes marked. Those will be your best candidates. So let's go in and let's take a quick look on the bearish side. Sorry that this video is getting a little bit long, but I want to show you some of these new features that we're going to be using. And we can go in and take a look at when. I'm going to take the the SPY overlay off, and you can see that this stock is starting to break down. And let's see if we can speed this up, see if there's anything that I noticed yesterday that looked particularly good that we'd want to highlight on the short side. I don't see anything right off the bat. I know some of the names that we traded yesterday, and LVS was one that had a really nice breakdown. There you can see these are upward sloping trend lines. Breach to the downside. Let's zoom out a little bit. LVS could easily be a nice short. Look at how it just blew through that 100-day moving average. The only thing about LVS that concerns me is that we're going to get the Macau revenues in about a week or so. That's where they do most of their business. That could have a pretty big impact on the company. So there's a little bit of an event risk in this particular play, but I like LVS. I like that breakdown. I think it's going to continue to perform. You can see that it's run up a lot. That is a horizontal breakout. Now we have a failed breakout. See, all these buyers in here, once that breakout fails, they start getting out because now they're at a point where they're going to start losing money. As they bail out, that precipitates that sell off. Same thing would be true of the SPY. So you get this breakout, bye bye bye, bye bye bye. Uh-oh, everybody out of the pool. There goes the market. So you get this sell-off on the backside. So let's take a look and see if we can find some other stocks that might be setting up. Medical equipment suppliers were taking a bit of a hit yesterday, so they were weak. I'm going to go back into a chart that is not quite as compressed. And let's take a look and see what some of these breakdowns might have been. SAVE, that's airline, tends to be pretty choppy. These are low minus trend line breaches. Descending trend lines tend not to be as reliable as the upward sloping breakdowns. So we'd prefer low plus breakdowns. I don't see anything that I like particularly there. And now we're going to go into a bunch of stocks, and I'm just going to look for where all these dots start to line up. VFC, apparel has been weak. Foot Locker has been absolutely annihilated. This stock probably still has more downside. I know that most people will look at this and go, I can't short it here. It's already down so much. Well, these asset managers are bailing on the company. They absolutely hate that earnings release. And you can see how it has tanked and it has not been able to come up for air. Walmart, that's starting to break down a little bit. Still looking for a stock that I really like on the short side here. So I'm just going to keep going through some of my searches, and I'm going to keep clicking on the ones that have lots. That's all I'm doing. I'm just very quickly looking through. Right now, Win is looking pretty dang good. ANET. Let's take a look at that. That's a nice little breakdown here. Not able to get into the gap back below the 100-day moving average, but it has had some buying. There's a key bar in there, so I'm going to avoid that. We've got Baidu. Just taking a look at some of the stocks here. A lot of the tech stocks have rallied recently. They might see a little bit of profit taking in here. And just going through the list, I think LVS might be the short pick for the day. Just keep in mind that on a short-term basis, I like this short. Take a look at BBY. That one has quite a bit going on too. You can see it's continuing to drift lower, but here's what I don't like. I don't like this choppy type of trading. Up and down and up and down. This is a nice feature in the new version we're going to release also. When the stock, the company, gets within 5 days of its earnings announcement, this would typically be blue, and you can hover over and see what that earnings release date is. Well, once we're within 5 days of that earnings announcement, it turns red. So when you see red on the chart, you know, hey, they're going to be announcing earnings very soon. I should keep my trading on this stock very short term. So I don't like this choppy price action. I've got to keep the video fairly short. So I'm going to, we'll take a look at one more here. Airbnb, just not seeing anything there. The market's been in rally mode, so it's a little bit more challenging to find shorts in here. And I like that LVS chart. That to me looks like a nice short. So let's revisit it. And then let's take a look at the price action from yesterday. You can see these are nice technical breakdowns. We'll go into that 5-minute chart. We'll look for that relative weakness. And there's an example. So you get this on your chart. Oh, that was a nice gap down. Hey, you know what? If LVS, which is already relatively weak, has an uptick in 1OSI and it gets above zero and then it gets back below zero, I would like to have an alert because that will give me a good entry point. And that would be my entry point for a short. Let's review what happens. You come in, I want to short this stock. I want to short this stock. And so, yes, it's down. It looks good. And so you start shorting it in here. Or, oh, there's the one. There's the long red bar right there that I've been looking for. There's the breakdown to a new low of the day. So you start chasing it here. And then you get this bounce. Now you're like, oh my God, not again. I got to get out of this trade. So you cover your position for a loss. Now, if you're going to be shorting a stock, you should have more staying power than that. The open of that red candle would be my stop, at least on a short-term day trading basis. But waiting for that moment works out very well. So now you get this big sell-off. Right in here, you have some relative strength building. Well, you've got nice gains in here. So you could take profits in here, or you could say, you know, this is just going to be a bounce because we've got lots of stacked red candles. Maybe you didn't take the trade initially, so you see it in here and you set the same type of alert. Well, there you've got your cross above zero. There you've got your cross back below zero. Now you're short in here. And by this point in the day, we know that the market is weak and it's going lower. And there's your entry point around 56.25. Stock gets down, not quite $1, but pretty close to $1 lower. Really nice trade. This is how the alerts are going to help us to enter trades and to exit trades at really good intraday prices. Thanks so much for watching, everyone. I'm sorry that this video got a little bit lengthy. I wanted to show you what was happening in the market, which, by the way, today we had the FOMC minutes. They're not likely to convey any new information. Fed officials have been very, very vocal over the course of the last 2-3 weeks since the FOMC statement, so I'm not looking for any surprises. I am expecting to hear, hey, we're fairly hawkish in here. We think that there's a chance that we might have to raise rates in June because inflation has been so persistent. And right now there's a 38% chance that they're going to go a quarter point in June. Well, the market is pricing in that there's going to be a rate cut in Q4. There's a big disconnect in terms of what the market is expecting from the Fed and what the Fed is actually saying about the economy and inflation and what their intentions are. So that's not a particularly bullish backdrop. So in any event, we've got the FOMC minutes coming out today. If anything, I think it's a cold splash of water. I think the market continues to pull back comfortably within its range. And then we've got GDP and the PCE deflator. I don't think that's going to be anything big to trade off of. And then we head into the Memorial weekend, which is going to really slow the action down. So I think I might do a video Monday instead of Sunday. It won't matter because the market is closed. So watch for that video. I'll post that. I'll try and find a couple of new picks, and hopefully Washington, D.C. will get their act together and we won't have a debt ceiling crisis. Thanks so much for watching, everyone. Please leave your comments. Come check out the new features in Option Stalker Pro and take the 2-week free trial. Plus, you'll be able to see all of these trades real time. Thanks so much. We'll see you in a few days.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.